Hello everyone, Singer Vielle's 16th of June 2017 Google Hangout, CPD accredited. Let's welcome everybody and let's tell you who's here today. Me, Neil Singer. We have Richard Walford. We have Philip Nell. There he is, Philip Nell. Adding a bit of professionalism. Fund director of Hermes, a specialist in everything. Dower Henry. Okay, guys, let's talk about, first we'll deal with some news. Oh, CPD, remember everybody, this is CPD accredited. If you would like a CPD certificate after the Hangout, please drop us a note and we can send you a certificate towards your required hours. Okay, so what's happened since last Google Hangout? What's been on the news a lot, guys?
The election, possibly?
The election. The election. What's your view on the market, Phil? How's it going to affect the market?
Well, clearly more uncertainty doesn't exactly help risk assets, and real estate is a risk asset. I mean, my view is I think it's probably fairly benign from a UK investor perspective. We're certainly, from our conversations with clients, we're not seeing a material change. I think where we are seeing a change is in some of the overseas funds and their appetite for the UK, and there've been some other kind of things coming out around the EU and GDP forecast growth and all the other things that actually I think are starting to persuade people to think beyond the UK now.
Interesting. So actually, what you mean, they're saying that they were investing in the UK, but they're now less inclined to do so?
Yeah, I think most overseas, so if we're talking about North American, Far Eastern or Middle Eastern investors, would look at Europe in one holistic bucket. They are pan-Europe, UK and continental Europe. And at the moment, I think go back 6 months, probably pre-Brexit, they were definitely more focused on the UK. GDP forecasts were much stronger in the UK. You know, we were kind of at the further down the road in QE, and I think that was encouraging them that our recovery was a bit more advanced. In the last, post-Brexit, we were still holding up very well, and a lot of them, although one or two were showing signs of nervousness for the UK. But it was then, I think that the result of the election last week, because of the weakened mandate, because of the fact that Europe looked like a stronger entity now, and the French election probably in combination with that make people think actually Europe looks perhaps, or continental Europe looks perhaps a slightly better bet than the UK at the moment, if you're coming from the Far East or something.
Well, I'll tell you, yeah, interesting. I said something interesting yesterday. I was in Dublin and I was talking to some of the property professionals in Dublin yesterday. What I didn't realize is, because I was saying to them, oh, you're going to be the winners because London's going to lose companies who are going to relocate to Dublin. And they said that actually the problem they've got is that 40% of their exports go to the UK. So actually, they weren't happy at all. And but because of I don't actually think it's such a bad thing that the Tories have been reined back a bit from this hard Brexit, because, for example, in Ireland, it means that hopefully they're going to have free movement over the border with Northern Ireland. Apparently, some farmers have got half a field, one field in Northern Ireland and one field in Southern Ireland. So having a hard Brexit would have been very difficult for them, plus the trade. So actually, Europe as a whole could suffer. I actually think it's hard to say actually what Brexit's going to do. I think the market, though, is generally quiet. But I also think that there's just a bit of depression in the market generally, not because of anything economic, but we've had Manchester, we've had London Bridge, we've had Brexit, we've had the election which was very divisive, I thought, and we've had that terrible fire. So I just think people are just a bit down, and markets move on sentiment, and I just get the feeling that sentiment might be a bit off. Guys, anyone agree? Or anyone want to comment on the election? Anyone?
I agree.
Sorry.
I agree. There is a lot of angst amongst people generally, I think, at the moment, and I think of course it filters through to business, People read the newspapers. It's all quite negative, and I think as you say, sentiment goes a very long way. And at the moment, there isn't that much necessarily for reason. There aren't necessarily very many reasons to be cheerful. And I think that as a result, people look at things on a fairly pessimistic basis. And I think that that is why you're seeing in our market anyway, somewhat of a stagnant or stagnating marketplace.
Yeah, well, the pound has gone up a bit. Is my microphone on still?
Yeah.
The pound's gone up a bit, so that helps. Okay, but let's be positive, everyone. Let's be positive.
Yeah.
You can't go through life being negative. Let's be positive. So let's talk about some of the news. Anything other than the election? A couple of things I thought were interesting to talk about. The first thing was, this week, you may have read that Easy Property merged with the Guild of Estate Agents. Does everyone know what the Guild of Estate Agents is?
Yes? Explain to us, Neil.
Okay, so the Guild of Estate Agents basically is an umbrella organization. What they do is they sell services to independent estate agents around the country, and they have a brand called Fine and Country, which you may have seen as well. So the idea is the Fine and Country is like the upmarket brand, and then they have the Guild. So the idea is that if you want to advertise in the Sunday Times, you can advertise as an independent agent under the Guild's banner, and you get. Now you're competing with the Savills and the Struts of this world because it's all high end. And then they've got the Guild generally, which is outside Fine and Country, again, providing services. Well, anyway, they have, in effect, it would seem, sort of reversed into Easy Property, which haven't been having brilliant time, who posted £11 million losses on a £1 million turnover, which is not that impressive. And I have a feeling that the investors decided that they needed to change. But this is the interesting thing. Easy Property, its whole model was about an online estate agency. The Guild is a traditional high street estate agency. And of course, the traditional high street estate agency has been knocking the online agencies for months now, for ages, because obviously they're losing market share. What the Guild are now saying, and you can go online and you can see the video from the CEO, that they want to offer a hybrid service. They want to offer, in the same way that Countrywide are doing and a number of other estate agents are doing, they want to offer the traditional sale at 1-2% fees, and then they want to offer the cheap, Easy Property type offering to their marketplace. So it's quite interesting, actually, that the Easy model is changing. And also it's quite interesting that the Guild's model is changing. So I thought that was quite interesting news, really.
Yeah.
You know, the world's changing, guys. Anyone want to comment? Anyone interested? That was my thing. No. discussion. So that's that. Right, guys. What about the Scottish market? Who wants to talk about the Scottish market?
Okay, well, that's a positive thing to come out of the general election.
Yeah, I agree.
You know, I think a lot of investors were pretty off Scotland, obviously from the risk of a second referendum perspective, which is now much less than it was. Demand in Edinburgh for offices has been sky high, actually, from occupiers, but there's been very little development because of the nervousness of investors. So for anybody holding Edinburgh office assets, I'd say it's been a massively positive outcome. And some good news from Henderson recently on their St James's Place development, where they've got a number of those larger units away, and that again will really regenerate that end of, not that it needs it particularly, but the end of Princes Street in Edinburgh. So I think for Scotland, it's a great, well, certainly from an investment perspective in Scotland, it's a great result.
I said he was an expert, didn't I? Well, actually, we've been selling in Scotland, and we've also got our office up there run by Graham Waddell, who can't be with us today, I'm afraid, but he's very positive now because the uncertainty around the referendum is off the table. So I agree with you. I think the market's going to buzz a bit in Scotland. In fact, we've actually just picked up another sale in Scotland, which will be announced shortly at singerviellesales.com. Okay. Right, guys, you wanted to talk about a couple of things. Dale, do you want to talk about your topic?
Yep, sure.
Ooh.
Why is there such thing? Okay. So I just wanted to have a quick talk about the subject of EPCs, energy performance certificates. I know it may not sound the most thrilling of topics, but it is something that we are finding is quite topical at the moment. And only this week and the last sort of few weeks or months, we've seen it actually have a bit of an impact on the investment market, and certainly when we're selling properties. So for those of you who don't know, if you're selling or letting a property, you have to have an EPC in place beforehand. And last year, there were some new regulations introduced, which said that as of April next year, it will be unlawful to grant new leases or renew existing leases unless you have a minimum energy efficiency rating. So anything with a rating of E, I think it's E or less, you won't be able to let a property or renew existing leases of residential or commercial properties. And what we found is that when we're selling now, buyers are now becoming very aware of this, and whereas people would really just see EPCs as something really fairly sort of insignificant and just really just part of the documentation of a deal, and they didn't really pay any attention, we're finding that buyers are now very much looking. We're finding that buyers are very much, this is something they're really looking out for now. And only this week we had a deal where the deal's been put on hold because of a low EPC rating until that rating is improved. Last year we had someone, the same thing, a buyer wasn't comfortable proceeding until the EPC rating was up to the required standard. So I think this just means that for landlords and people selling properties, you just got to plan ahead and sort of address these issues now, because a buyer's not going to want to be responsible for the potential costs of improving these EPCs. Some of the costs we found can be very insignificant, can be just a case of replacing a few bulbs, or they can be up to, you know, replacing air conditioning systems. So yeah, I don't know what, Phil, if you know, as within your portfolio, it's something you're very conscious of.
Can't hear you. Phil, can't hear you. Are you muted? Oh, there you are. There you are. We can hear you now. Sorry.
You hear me?
Say that again.
Okay. So EPCs have been in the pipeline for quite a few years, and you're right. I think they were largely being ignored by a lot of investors. You know, it was kind of a box ticking exercise. Have I got an EPC? You know, either for a whole scheme, because if you had a multi-let, let's say, I don't know, shopping centre, you could end up having an EPC for the shopping centre and an EPC for each individual unit, and they might be different. And the initial software that the EPC assessors were using was pretty basic, and it was all kind of desktop done, so it wasn't taking account of actual, you know, the reality of fit out. Because the other thing is it's great in principle. Like a lot of the climate change or legislation recently issued, both EU and UK, to limit the impact of climate change, it's actually, at the heart of it, it's got some good, you know, some good philosophy behind it, but it's just the delivery, as like a lot of these things, is a bit compromised, and EPCs were a bit like that. And I think you're right, people ignored them because they weren't really sure what they did, and it was a long time before April 18, and therefore you didn't really have to worry about reletting. But now people are definitely waking up to it. I think there's a massive opportunity. I mean, functional obsolescence is the one area where you can add value to a real estate asset. You know, you can take a building that's functionally obsolete and make it unfunctionally obsolete. So this is a great opportunity to do that in the context of a piece of legislation. So, you know, I think there's an opportunity to add value that doesn't currently exist. But you're right, it's turning a lot of people off certain assets.
Interesting. All right. Okay. Thanks, Dale. Richard, you wanted to talk about something.
I did, and I don't know if it's gone slightly unnoticed or not, but yesterday it was reported that we came as close as we have come in, I think, 6 or 7 years to a rise in interest rates, because the Monetary Policy Committee met and voted 5-3 to keep interest rates as they are. However, that is the closest it's come, and had it been a draw, then it would have been down to the governor of the Bank of England, Mark Carney, to make the decisive decision. So forecasters have revised an increase in interest rates down from between 2020 to 2022 to potentially increasing later this year. And I was interested to know what Phil and Neil think, or what effect a rise in interest rates could have on the market, our level of the market, as well as the institutional market.
Okay.
Who wants to go first? You want to go?
Shall I go? Okay. I mean, a really good point. Actually, I was gonna mention the MPC meeting. I think it's pretty fundamental. I mean, the lower for longer philosophy has prevaricated for a long time, and it's kept people investing in an asset, or in assets where the fundamentals might not be there. So, ultimately, property is driven by demand from occupiers, but people have gone away from that and are valuing things based just on the fact you can't get yield anywhere else. Therefore, pay 3% for a real estate asset because that's a better yield than you'll get in the rest of the market. I think with inflation rising, and the wrong kind of inflation, because it's input inflation, it's imported inflation, it's not demand inflation, that a squeeze on.
Oh, he's frozen.
You all I know you're back again. Could be economic, very painful. So I think
you froze. What were you saying? You're saying you got to the point of input.
I think So inflation. The inflation that we're experiencing at the moment is imported input inflation, so it's cost push inflation. It's not demand side inflation. It's not because we are over demanding products. It's because the cost, as you said earlier, Neil, the cost of importing products from places like Ireland is materially increasing. CPI is now running at just under 3%, and that's putting a squeeze on real wage growth, which is now negative. So I think interest rate rise could be very significantly detrimental to economic activity, and given that we are, this is a consumer-led economy, the reason why we've been doing so well since Brexit has really been because everybody's been actually overly confident. I think half the population wanted Brexit, so therefore half the population are happy because we vote to leave the EU, and therefore you can see that there's been that sort of optimism continuing in the economy and in terms of consumer activity, which possibly got as you said earlier, Neil, it's been dented, I think, recently by recent events.
Yeah.
So that, combined with an increase in interest rates, could be seriously damaging for economic activity and therefore for occupier demand. What will it do for investor demand? Obviously, make it worse, but it will push prices up. It'll push the cost of money up, and therefore and the relative return you'll get from other asset classes. So I think it'll sorry, I want to be more positive, but it can't possibly be positive for UK real estate. Sorry.
Well, interesting enough, you remember when interest rates, they used to be 8-10%. I mean, that was the norm, wasn't it? And the whole point about it was that whilst interest rates were high and the cost of money was high, rents went up, because it's always good to own a property asset in an inflationary period, because the rents go up. It's like buying a house. Gear yourself up as high as you can when interest rates are at a level, which means that the value will dissipate over time. So that sort of is happened in the past. I think the problem actually is that I agree with you. I think that will rents go up? The problem is it's about companies being squeezed. And I actually take the view, I'm no economist, I take the view that the reason that the economy hasn't done so terrible since the Brexit vote is that a lot of companies didn't have to put their prices up because they'd hedged their currencies. But that hedging from friends of mine in the retail game has now run out. So the next time they actually put their orders in, or they're putting their orders in now, they have to put the prices up. So we're going to see clothes going up. We're going to see food going up. I think it's going to be difficult. So it depends. I suppose it depends. You're right. It's all about sentiment, and it all depends what happens with the talks with Theresa May, etc. Anyway, so we'll see what happens. Hopefully the market will carry on. There's no question that a lot of buyers that we sell to are not property, in quote, professionals, but that's an enormous part of the market. But they are buying for income, and people like owning a property. They can actually look at it and understand it. So I think that's the case. Right, should we have a vote? Who's going to be the next prime minister? Who wants to have a vote? What's your money on, Richard?
My money is Theresa May is getting weaker and weaker by the day.
What's your vote?
And I think that whoever is advising her, should. Yeah, I think it's crazy what she's doing. Well, I think that it will be either Boris Johnson or the other lady. What's her name?
Amber Rudd.
Amber Rudd. That's it. Amber Rudd.
Phil, so you've hedged your bets. All right, Phil.
Well, I was going to go Amber Rudd. I can't see Boris Johnson. I think he just divides too many people and too many people within the Conservative Party. So I'd go Amber Rudd.
Dale.
I actually have got a feeling Boris could be next. I think he's been keeping himself out the limelight, and I think that's been fairly intentional.
Why are you echoing so much? Anyway, you are all right. So you're Boris.
Nobody's going Corbyn.
Funnily enough, he wasn't on the tip of my tongue. Boris, no question. I actually said, I give him 6 weeks. It's been in 6 weeks. It's going to happen very quickly. That's my view. Anyway, let's see what happens. You heard it first at singleourselves.com. Not that we're a political entity. Why is there an echo? Dale, that's you. Right. Okay, guys. Can I talk about something technical that I think the audience might be interested in? Okay. Let's talk about new digital signatures. I want to share something with you. Hopefully people know what a hash is. You probably may not know what a hash is, but I'm going to explain what a hash is. You may have seen this before. If, let's say, you were to take a word, look, Vielle sales, all right, Vielle sales. Can you see at the bottom, it creates a hash string. It says EFF71999. That is a unique hash, a unique line of code, sorry, not code, representation of the word in the box Vielle sales. Now look, if I just had to change it in a tiny fashion, if I put, say, a dot on the end, all of a sudden it's F54B3. See what I mean? So a hash generator will convert whatever's in here, whatever you put in here, and will create a unique string below. Now, the reason I mention that is because I want to talk to you about something else. I want to talk to you about what's known as the EIDAS regulations. You might find this interesting, Phil. And
I'm sure I will.
Okay, so unique. Right, there's something called the EIDAS regulations. As you know, we are the lead users of the click-to-purchase technology, click-to-purchase.com, which allows you to exchange contracts online. And when we set this thing up a few years ago, we had to find a way in which to create digital signatures to be legally binding. And we went to lead counsel, and we were advised that you had to create a combination of an affirmation process and a unique ID. And what that meant is you couldn't make an offer in error. You couldn't press a button and made an offer to buy a building, which you didn't mean to do so. So that was the affirmation process. And the unique ID, we actually managed to do this by having a way in which you logged in and you were tied to a property and no one else could make that offer on your behalf. Guys, can you see the screen? Okay. Now, what's recently happened? The European regulations have brought out what's called the EIDAS regulations, and they've brought out a way in which contracts in law in the member states are capable of being affected online. And there are three types of signature. There's what's known as an electronic signature, which is something like an email. There's what's called an advanced electronic signature, which is what I've put up in front of you. And there's something's called a qualified electronic signature. Now, the regulation also says that a advanced electronic signature has the same effect in law as a wet ink signature. And it's then down to the member states to implement it. So what Click to Purchase has recently done has improved the encryption and the software to a level to go beyond the requirements of the EIDS regulations. So we no longer have to rely upon council's opinion, which we did a few years ago. We now have gone to a much higher level. So if I can just very quickly explain, what we do is we have our own X509 certificate. Now, what that means is it is a certificate which is used to encrypt data. And the reason it's so important is that it can only be decrypted by using something known as a private key. This is the Click to Purchase private key, which was purchased from what's known as a Trusted Root Authority, TBS. And if somebody were to try to decrypt a .ctp file of information, they need access to this certificate. Now, they can't obtain the certificate because it's hidden within our technology, but we have created a way in which to ensure at an extremely high level that the offer in no way can be hacked. And if it were to be hacked, you could actually see how it could be hacked. So here's the EIDS regulations I mentioned to you. Now, this is the My Account page when someone makes an offer online. And the reason I want to show you is this. You can see we've now improved it to a level whereby, number one, you can download the memorandum of sale.
I didn't realise you were selling your house, Neil.
Oh, no, that's just a shed. Okay, so right. There's the memorandum of sale. The second thing is you can see you can now download in your My Account your actually digitally signed document. Now, a digitally signed document looks like this. Now, this is all the gobbledygook, which is then encrypted and hashed in the way I just showed you, or demonstrated online. So what information is being encrypted? The information is being encrypted is what's called an XML file. This is an XML file. An XML file is everything to do with the data surrounding a memorandum of sale or a bid that you make through a Click to Purchase. So for example, you can see here, look, bidder, you can see the property, you can see how much, etc. This actually is the file. And then the file is then encrypted with the hash technology, which I actually showed you. And you can see here, seller signature 48BC ECF, etc. That hash is unique to the information there, which is, as I showed you earlier, is how a hash works. Now, what we've created at Click to Purchase, which I think is really quite interesting, is that we now provide you with an ability to upload that file that is yours as a bidder. You can download it from your My Account page, as I've shown you. You can upload the file, and then you can press the validate button, and it validates it, then decrypts the information. It opens up the information. There's the hash, which I mentioned earlier, 48BCE, who the bidder is, what the property is, etc. If for some reason the file that you upload doesn't match, you cannot open it. Now, the reason you're able to open it is simply on the basis of it's on the basis that you've uploaded it to the platform, and it's accessed the private key of Click to Purchase. You can decrypt it. Now, the reason this is so significant is as follows. If, let's say, you had bought a building for £1 million and you downloaded your .ctp file and you kept it on your computer, and someone had hacked into the Click to Purchase system, let's say, I mean, it couldn't happen, but let's say in theory it happened, and they changed the price from 1 million to 1.1, and the vendor said, well, you actually made an offer of 1.1, we've exchanged the contract with you. If that were to happen in theory, which I said it can't, you as the buyer have got your .ctp file proving with a different hash that it doesn't match the file within the system showing 1.1, because the data input is different and therefore the hash key is different. And then that would happen. And then we at Click to Purchase would say, oh, hold on, something's gone on here. What's happened? What's gone on? And that is what is so important about encryption technology, and why we've gone to a level which is extremely secure, which provides security and transparency which no one else can offer. So no one else is actually doing online exchanges other than the Click to Purchase system, as you know, which Vielle uses. Although there is big news coming, which we will be able to announce shortly. But that is, I think, an added layer to keep us even further ahead if there is someone out there busy trying to do the same sort of things we're doing. How impressive is that? It's good, isn't it?
All right.
It's interesting. I mean, it's quite an interesting development, actually, because when it first came up, what I've learned, actually, in being so involved in technology over the last few years is that people out there make it very difficult for you. And as long as you've got the head to try and get around these difficult situations, because most people don't, most people give up, sort of keeps you ahead. So that's it, guys. That's it. So should we talk about so we talked about the market. We've been on for about half an hour. I think we normally have a quick summary of the things we're selling, but we've probably covered quite a lot of topics today, guys. So I think we
agree.
I think we could probably simply say, if you want to buy properties, singviellesales.com. If you want the best marketing, can you think of an agency, Phil, which has the best marketing platform around? Anyone come to mind? Anyone come to mind?
Vielle, Neil. Vielle.
Exactly.
What else? Don't go anywhere else.
Don't go anywhere else. Don't go anywhere else. Okay, Phil, a star as always. Okay, so I think we are done for today. So, Phil,
great. Okay.
Thank you very much.
My pleasure.
Expert opinion as always. Dale.
Thanks, everyone.
Richard.
Bye, everyone.
Thank you very much.
Bye.
Have a nice weekend. Thanks for. Bye. Don't forget. Forget. Oh, if you want your CPD certificate, I've got to actually give you a question. I know. I've got a good one. Which one of us thought that Boris Johnson would be Prime Minister within 6 weeks? Okay, so put that on your answer when you write to us to get your CPD certificate to prove you watched the video. Okay, thanks very much. Have a nice weekend.